Alright, this one is going to be the last one for the chapter 1 of the mentorship, and it's going to be a blend of everything that we've gone over, and it's going to be how to identify higher time frame institutional order flow. So what we've covered right now is the data range shifts. We've covered the interest rate differentials. We've covered higher time frame stuff overall. Now what we want to do is blend everything together. Yeah. So let's look at the weekly. I'll show you how simple it can boil down to, right? When we saw this shift on the weekly, when we start closing above here, this candle, we knew that we had a very good hunch that this high will be traded to, and ultimately this was our end goal. It looks like the DXY doesn't want to get above here. If we just get a simple fib tool out, let me go from high to low on the weekly. Where is the DXY trading at right now? You wouldn't want to be buying the DXY here. In all honesty, you don't want to buy the DXY here at all. It's far too expensive to buy when you're looking at this external range. You're near the top of this range. You don't buy near the tops of the range. This is known as a premium. When you're in premiums, you look for shorts. When you're below the 50 though, you look for buys. Look what happens when we were here. When we traded above this high, yeah, when this low was established and we're moving higher away from it, so we're around here, we know that we're in a discount area. And when we're in discount areas, what's institutional order flow doing? What's the big players doing, right? The big players are buying at every single discount and they're selling at every single premium. And now if you're confused why I'm saying institutions, what about the algorithm? The institutions, the large players, and I'm not talking about Barclays, HSBC, like Citibank. I'm not talking even Goldman Sachs level. I'm talking the interbank level. These are the people that have the large pockets. They are just underneath the central bank. Yeah. What they do is they buy every single discount and they sell at premiums. They are in line with the algorithm. The algorithm is the one that's delivering their order flow. They are just getting in line with it. Otherwise, if they owned the market freely, there was a complete free market, let's say there was no control, there was no governance of an algorithm, then this chart will be chaotic and it will be one way up and it will be the elite just having a long till the dollar goes to 1,000. It's unrealistic because of how the world works as economies and there's trade between countries. You can't just long up one currency. Otherwise, no one would want to trade with those currencies, other economic like clapback, all those type of things. Anyway, we're in what is called a premium for the DXY. If we look at this range from this external high to this external low, everything in here is internal targets. Until we breach one side, this is what we're looking at. Rejection of the 17.5. Notice how the bodies are not closing above it. And I don't expect the bodies to close over it. I'm expecting this to be the high, right? And I know we haven't covered gaps and order blocks and things like that. But this is the gap that I was mentioning, right? Remember I mentioned this high? The high is forming here. It's crazy how the high, I'm expecting the high to form here and a potential sell model is playing out. If we trade below this one, we will trade below here and we'll trade below this. It will take a long time, but it will happen if this is a sell model. A simple OTE. If you saw this on the 15-minute, disregard the fact that it's a weekly chart. The only difference between the weekly and the 15 is that the weekly takes a week to close and the 15-minute candles take 15 minutes to close each. Yeah, that is the only difference between the time frames. Is the time that it takes for a candle to close is the only difference in each time frames. If you saw this on the 15-minute, a high to a low OTE, Ultimately, this is just a retracement back into this external range. Correct. This isn't. It's bullish on the time frames. If you want the weekly, yes, this is crazy one up move, and people might think that the dollar is going back to what it was. This is when you need to consult the higher time frames, guys. Look at the weekly. We are at a OTE. What is the chances if this was a 5 minute chart and you see this reaction of the OTE area? What do you expect the next 5 minute candle to do? Or if it's a 15 minute, what do you expect the next 15 minute candle to do? Break lower and lower and lower? Highly probable. This is how you guys need to think. Trading is not easy. It's a lot of educated guesses because we want to anticipate the next candle coming down. And this candle, look, we make the high and we take out this weekly high, right? We take out, look, this candle's wick is higher than this candle's wick. We take out that candle's weekly high. We run above it aggressively, and now we're starting to close. Where the weekly candle closes is very important. It's at that stage right now where the DXY, I'd like to see reaction off of it. I don't see any more buy side targets. I don't want it to trade above here. I don't think that it will trade above here unless interest rates do kick in. I don't expect it to trade above that. I I don't think that the Fed will increase interest rates in fear of crashing the stock market, given that the whole thing going on with Ukraine and Russia and NATO right now, it's not favorable for the US economy to increase interest rates amidst all the fear and stuff like that, right? They would want to do, looser fiscal policies and monetary policies, and they wouldn't want to be doing tighter rates and things like that. If this next weekly candle is like to go down, you have your biases for the next week. I'm not saying go in there and just short blindly, but every short opportunity. Now, there's a difference between your bias being short and looking for short opportunities. What I mean for being looking for short opportunities. So let's go on to 50 minute. We assumed that this week was going to be bullish, right? This week was bullish for the Euro USD because we was bearish on the DXY because of all the gap fills, yeah. So look, we're bullish on the Euro USD. That doesn't mean buy the Euro USD blindly. That means look for buy setups on the Euro USD, and there's plenty. There was a plenty of buy setups. This one right here, OTE, high, low to high, come back OTE, yeah. This is another one that I'll teach you guys. This is called a mitigation block. This entire thing, retracement back. This is into a 5 minute order block. I saw that today happening. Let's go to it. Yeah, look right here, 5 minute order block. OTE, high, low to high, retracement down, shut off. And now look at this tight consolidation. Look at how tight this consolidation is, because tomorrow is 1, 2, 3, 4, 5 news event folders for the euro and the dollar. So this is normal. Back to the point of higher time frame institutional order flow. You want to always consider where you are within the external ranges. Looking at this chart naked doesn't tell you a lot. When you add the fib and you're showing the levels of the fib, now it has more context. You're seeing 50, the 50 level. You always want to be buying below the 50 level. Below the 50 level, this is a discount. We want to be buying it. There's no point of selling at a discount. Why would you want to sell to people at a discount price? You want to always sell to them at the higher prices, right? And you're always going to buy at discounts. That's just common logic, right? However, you wouldn't be able to frame this without knowing where you are within this range. So this external low, this to this external high. Now we have our range, right? Until one side of the range is violated, there will be another external range created then. When this low breaks, then we'll anchor this high to the next low. When you do that, you look at all the levels between day 50 and the 50 above it and the 50 below. This is called premium and discounts, and this is how institutions eat up orders. They are buying at every single discount and they're selling at every single premium. If you want to make a note of it, premium is above the 50 and discount is always below the 50. No matter which way you put the fib. So if it was like this, we're below the 50, so we're at a discount. Above the 50 is a premium. I know these numbers are flipped. That's why I'm saying below the 50 is a discount and above the 50 is a premium. So let's say that this is the range you're using, right? Regardless of the range you're using, regardless, you're at a discount price. When we're at these discounts, you want to be looking for buy opportunities. This is how easy it boils down to, and you're only able to see the market like this at this ease when you're looking at the weekly and the daily at in the lens of premium and discount prices. We're gonna add onto the concept of premium and discount prices heavily. This is something I want all of you guys to use. I want you lot to always use the fact that I'm trading within a daily or a weekly discount or premium. Nothing below it. Nothing below it. This is how you get the best bias, in my opinion. All the other ways, I'm just giving you guys tools. I'm giving you guys tools to make your plan. Now, the data ranges is something you guys should always consider when a market shift happens, because then you have your clear targets, right? When the data range targets are happening and you get into the discount, expect price, don't expect price to always take out the last one. It runs out of steam. That happens because it's in a discount and it's not favorable. The algorithm delivers price to the big players. We're getting in line with them. That's what we're doing. You hear the fact that it's HSBC and things like that. It's not HSBC. HSBC doesn't print candles. HSBC isn't one creating fair value gaps. They're not the ones that are moving the market, right? The algorithm is the ones moving the market, delivering liquidity from the big players. That's what they're doing. We don't have, we don't inject enough liquidity in the market to move it. Even if we put 100 lots, these people put in contract sizes of tens of millions. We won't even be able to trade that on MetaTrader, I'm sure. I think the max is 100 lots. Anyway, so on the weekly, if you're looking at it from this range, low to high, or this range, high to low, either way, you are at a discount, correct? When you're at discounts, you're looking for buy opportunities. Now, when you're looking for buy opportunities, you need to look at the places where price can stall, because you always need to know where to get out. As long as you're below the 50, you should be okay. When you get to the 50, that's called fair value or equilibrium. As soon as you get above the 50, you want to see how price is trading, because price can really easily reject off the 50 because the algorithm doesn't see these candles. All it sees is numbers and prices and time. That's all it sees, right? So as soon as we get to the 50, the algorithm will consider the fact that it is in a state of premium. It will favor short positions over long positions now. If you go to a range, a lot of times you'll see there's been rejection off the 50 levels. A lot of times this happens. It rejects off of the 50 levels purely because the algorithm sees it as a state of premium. Now, within the premiums, you want to line up things, which we're going to teach in chapter 2. In chapter 2, we're going to revisit this and it's going to make a lot more sense. However, right now, I want you guys just to see the market as premium and discount pricing from the weekly and daily swing points. Weekly swing point, or you can use this one if you like. Regardless, it doesn't change anything. If you go to the daily, this should be the same. Until the 50 level, we want to see buying. So we could come up and revisit this high on the DXY. We have many volume imbalances to fill. This one is still not filled with the bodies. There's this one, and I think there was one more. There was one more somewhere in. Yeah, no, that's this one's filled. There was one more, I'm sure, on a 15-minute time frame. I think it was 96 something. This one, I think it's here, right here. Yeah, that one. On a 15-minute, there's a gap there. Going back to the DXY, just to reiterate one more time. Weekly OTE. The OTE outlines premium and discount pricing. Always consider this. I know it's such an easy tool, and you're thinking to yourself, it can't be this easy. The other teachings, it can't be this easy. It's not about it being easy, it's about it being logical. We're at a weekly premium. We're looking for shorts until the 50. Until the 50 level, we're looking for shorts. Unless there's a market structure shift, then we're looking for all the bearish objectives. The chances of this next candle following this to come down is also highly probable. If I delete this for now, this is a weekly gap, fair value gap. This wick is the start of it. My eye is on this candle though. I want to trade within this candle, the up close candle. I want to trade within that one, and we've got ton of space going there. If we go on the daily, we've got ton of space to go there. I want to see us trade into this. Yeah. If you trade into this and we react, then we could be looking for a bullish move again. There's imbalance here created from this wick to this wick. However, if we reject this area, if we reject heavy off of it, I mean we trade through, as in the algorithm doesn't reject off of it and bounce up to the upside, as in the algorithm trades through it. It shows that it's no longer considering bullish ideas, it's considering delivering sell side liquidity. So you want to look at the liquidity pools. Liquidity pool here, there's a gap here, liquidity pool here, and liquidity pool here. It's a daily time frame, so it will take a lot of time. However, let's go on the 4 hour. There's a gap here to fill. This gap's still not filled all the way. An untested order block. Gap here as well. I want you guys to consider DXY short until we reach this area. And because the fact that we're in a premium on the weekly. Now we're in a weekly premium. Now don't lose don't lose focus. This is important. Weekly premium, but there's also swings that you can do on the daily. So if we take the most current swing, so from here to here, we are also at a premium. Do you see what I'm saying, right? So on the weekly, large time frame, long term, we're at a premium. On the daily, we're at a daily premium. Until we get to the 50, this region then all becomes discount, and longs will be favorable. You never want to be buying at a discount and selling at a premium, no matter how good the setup looks, guys. No matter how good it looks, it's not probable. You want to be the most probable trades, and it all boils down to you being patient. Be patient with it. Your trade will come. Make sure it's in line with the order flow. You don't want to be buying at premiums. Believe me, you don't want to be buying at premiums. You only want to buy up discounts and you want to sell at premiums. Just like the big players you see, oh, you see those SMC traders on YouTube. I'm gonna get in line with the smart money. Yeah, I'm getting online with the order block that HSBC made. They're not doing that. They're not looking at it like that. They're looking at it purely at premium and discounts relevant to their external range that it's trading in. So I want you guys to always consider now, whatever you're looking at, if it's crypto, whatever pair is looking at. So if we go to the Aussie dollar, for example, I'll clear this. Let's go to the weekly Aussie dollar. Premium price from that range. If you go on the daily, it's clearly in a premium from this range. Heavy rejection, heavy rejection above this high. I wanted to see the Aussie dollar trade above into here. That was my best target for the Aussie dollar. However, it doesn't look like it's gonna get there. It could maybe get there. The chance of this daily candle printing higher is very likely on its hands. The Euro USD, I believe, will trade higher today. I, I want to see it retrace into yesterday's price action. So if we go into yesterday's price action for the Euro dollar, we see that this whole area needs rebalancing, right? It's just one pure up move. If we go down into the 30-minute, we can see it more defined, right? Order block here, the small gaps here. Ultimately, there's this gap plus the order block here as well. We want to see price trading too. Remember, this one is more premium than this one. This one is your best opportunity to take, right? Of course, it's very low. It might not trade there. I understand that. However, you want to see where the news will push, and there is tons of news tomorrow, guys. Yeah. If we go into the 1 hour, you see this gap here is pretty nice. This gap is very clear, and the 50% is in that gap. What I love to see is when the bottom wick is below the 50 and the top wick is above the 50, leaving the 50% of the imbalance. That is what I love to see. That is just like a bull's eye right here to me. Right here in this candle is like a bull's eye just waiting to just get a hit. This candle also has imbalance. We want to see where the euro wants to trade to. Now, it doesn't have to all come all the way down. We want to see where it's going to come down to. So what you can do is on a 4 hour, this is a discount where you want to be buying at. I'm not saying sell. I'm saying this is patience. You don't want to be selling in it because the direction it's going is clearly upwards because the DXY is becoming bearish. There's a nice order block here, and I'm sure in the 1 hour there is also, yeah, this is also a breaker block, which we'll go into later in the teachings, and it all lands up within the premium. That is your best probability trades. That is how you frame high probability setups. Now tomorrow there's a ton of news. 5 red folders, 1, 2, 3, 4, 5 for the euro and one and for the dollar collectively. And you see how price has already gone into that state of a range. If you go into the 15-minute, you're going to see it's super tight. It's very, very tight. It's not favorable to trade these type of things. You want to always wait for the clear distribution after it. You don't want to get into the range because that's what it's doing. It's drawing in retail traders, right? Every single time this candle goes down, anyone that's short here has the hope that it's going to break the range. When there's this up candle, they have the hope that's going to break the range. That is what the market is engineering the consolidation for. Building buyers and building sellers. It's building liquidity in order to fund the big move. Now, before the big move, we can expect there's going to be manipulation before the price before the news event actually launches, and that's very common. You want to see where the price is going to draw to with the news event. Yeah, don't think that when you see the breakout of it, that's the actual news event. Remember, using the higher time frames, you should already have your bias, right? Your overall bias may be bullish or bearish. I'm assuming we're going to have a retracement lower before we go higher. From the 4 hour, we have plenty of rebalancing to do. So we could be getting short into these areas, which would not be a bad idea. However, don't hold the short for long. Don't get married to your position is what I say. Stop marrying your position. Because once you think that you caught the high or the low, you're gonna just keep holding it, and you're gonna let go of logic, you're gonna let go of your objective view of the market, and you're gonna get emotionally attached to all your trades, and that's not what you want to do. Because once it hits these areas, it will retrace. I had a friend today on the Euro USD, right? He caught a short from here and it was going down, and I told him close that trade because it's retracing ultimately into here, bro. You want to close that trade. He didn't close the trade because he got emotionally attached, thinking that it's going to retrace all the way down. And what happened? Took him out, and he took a 1% loss that could have easily been avoided if he was thinking with your head. What I want you guys to do is outline premium and discounts on the weekly and the daily. If the weekly is not clear for you, that's fine. Now, when you're using the weekly, I want you to use the external ranges. I want you to use the external ranges. However, if you really like, you can use the internal ranges as well. So this is the external range, right? You could be using this one. Either way you look at it, you're going to be at a discount on the Euro USD. Until you get into that 50 level, you're looking for longs. There is no reason to short this pair here. Yes, we can be if it goes short and we're wrong, that's fine. We're wrong. But we're getting the most educated guess on the table for the daily direction. We're assuming every single time it's in a discount and this swing's made. How do you know it's in a discount, Omar? We don't know until the swing low is made. That is why trading is patience as well. So if we're looking at this high to this low on the daily, we don't know that this is a low until this rejects and this candle goes up. And it's further confirmed by this candle going up. Don't tell me you don't know that this is a low until this candle passes. You know that this is a low once this passes. And the only way you know that is through patience, right? So now we have that low put in place. We're below the 50. What are we looking for? Longs. We don't get short at the 50, but just expect there to be a reaction within the premium area. Where in the premium area, that's where knowledge of order blocks and those type of gaps and those we're calling them arrays. They're called arrays. Yeah. When we learn those arrays, that's where you're gonna consider the reactions off of. Right now we have this array. All this run up is one array, is a mitigation area. Overall, the takeaway from this video is very simple. Identify the premiums and the discounts and where you're trading at. This is a patience game, and this will literally test you as a trader, because some people can't wait and they feel like they need to trade every day, but every single day is not a trading day, right? We want to go in and look for what tomorrow? We want to look for longs. Favorably, when we want to look for longs on the euro. We're looking at this pair, GBP USD. What's happening here is we've broken lower. However, also in line with the DXY, and this is a very nice target area to have here. On daily, this is a very nice gap to trade into, which we could expect to trade into as well. So there's a little gap here on the GBP USD pair. to get long into this area. Looking at the euro pound, what we're seeing, we're seeing a reaction off of this order block candle. I'm expecting potential retracement into here to fill this gap. We want to rebalance this area, and then from there we want to see. So this candle I'm expected to trade lower. If that candle is going to trade lower, out of the two, the GBP USD pair should trade into this gap. This is going to close off chapter 1 in terms of higher time frame analysis. I've given you every single tool that I have to dictate where the higher time frames are going. When there is a market structure shift and you need to look for your new targets, I've given you the market structure shift data ranges, 20, 40, 60 look back periods to look at, right? Now I've given you the discount and the premiums where you want to be looking for longs and shorts, because within the data ranges there's always a sense of retracement as well. Remember, there's always a sense of retracement within the data ranges. I can try to do it quickly so that I don't want to confuse you guys too much. So if we go back to here, when we trade above this high, it's a market structure shift. But look at these retracements within it. There's a retracements within it. It's not just one run into the data ranges, right? You know, when we break this high, remember, we go to the 1st of March, or 1st of April, sorry, because it happens in April, right? The 19th. So we go to the 1st and we do the 20, 40, 60 look back period. But within the look back period, yes, your overall from the look back period, you're going to be bullish. But you need to know where to be buying. Remember, being bullish and looking for bullish opportunities is two different. If you're bullish and you're just blindly buying, you will lose. You will lose because you might be buying the retracement, which is gonna have you on your ass, literally. You want a bullish opportunity is a retracement on a bullish leg up. On a bullish move up, the bullish opportunity comes from the retracement of that. That's what it boils down to. So when we break this low, this high, we're coming now. Yeah. Now you can see what's formed. This low and this high. So you go to this low and this high, bang on. That's not even cherry picked. This is random. Yeah. Bang on. So when it retraces here, yes, you're trying to get bullish on to take out this high. This is your next objective within the data ranges. But where are you going to find your buying opportunity? At the discount price on the fib. So here, and then you're seeing the retracement down. You're waiting for that high to be made. That high is made now. This candle's coming down. Straight into the 79 fib. That was the 79 fib, I'm sure. And then a move higher. Now, when you're seeing this retracement again, what do you do? Low to high. Again, this is your buying opportunity. You're looking for buying opportunities every single time here. You're not looking to get short. You're looking for buying opportunities until your overall buy side objectives are done. How do you look for your buy side opportunities? Using the discounts and the premiums. When this low is made and we move away from it, and then we make another high, you're waiting for price to come back into the discount. Just like the big boys, you're eating that discount up. Trade off of it. Your buy side objectives are done as well. That's done. That's done as well. Any questions? Do you ask me? I want you guys to do this as an activity, right? So if you take the external range again from here to here, you'll see it comes into a deep discount and it doesn't trade above it. From here to here, it doesn't even get close. And remember, the range changes every single time. Every single time there's a new low being formed, you have to anchor it again. So now this was made, right? Some people may anchor it from here to here, and that's fine. You can do that. You can take this high. But however, what I like to do is take the most obvious high, which is clearly is this one, right? Take the most obvious high and the most obvious low. You don't, this isn't hard, right? You'll only make this hard if you're trying to be too techy, picking the right high. Same with the weekly. You want to take the most obvious high and low. So we can take this range. This is the external range, right? You can take the entire thing. That's fine. We took this entire thing. I remember when this one happened, from this high to this low, we came into that premium and then we sold. Why did we look into that premium? Because if we go from this range, high to low, I had this high to low all the time. All the time I had this high and low on Euro USD because this is the external range. It's not on this computer. Look at how when it comes to the 50 of this external range, it bounces off because it becomes a premium, right? Within that one, within that, within this overall external range, then you can start using the internal ranges. Premium, yeah, we're at a premium on the external range and we're at a premium within the internal range. Okay, look for shorts. That is what I want you guys to do. Focus on the external ones before adding in the internal ones. It's a step at a time. That might be confusing to some guys, right? You want to find the external range and have that anchored out. This is not going to move. This does not move. Your external one does not move until this is violated. Then you have a new range. When you have the external range, you're looking at where is price on the external range, and then you can use your internal ranges. So what are we at? We're at a discount on the external range. Now, if we go on the internal range, which is this high to this low, we see we're also at a discount. So discount external, check. Discount internal, check. What are we looking for? We are looking for long opportunities on the euro dollar because the external and the internal are both in discounts. We want to eat those up and get long. There's a lot in this video that might be new to you guys. The fact that I'm sure you guys have not heard of using the external and the internal, that's how you actually use it. It's a harder concept when you're buying the two because I know there's lines all over the place. This is something you might need two monitors for, I'll be real, because you want to have your external range on one computer and another one. Another way to just do it, you can open up another Euro USD, just a different broker thing. So if you go about Euro USD, I might just open up a Wanda for example, and now I got another Euro USD. Oh, this was when I was maybe a support resistance boy. This was maybe 3 years ago. Yeah, you can open up two and you can have them together. So you have one naked chart and you have one with your external fib, so that you know where you are, and you always want to make a note of where you are in the external fib, because this is how you have structure to your trade. Look at the structure, it's so perfect. When you see it like this, you're telling me it's not fully controlled, that this is not perfect to a T. It's perfect to a T, guys. So any questions, do you ask me. I'm going to be uploading this as soon as I can. This is the last one for the chapter one. However, this isn't the last time that we are reviewing higher time frame. We are always going to come back to the higher time frames because that is the best time frame in my opinion. The daily is going to give us direction for everywhere else. So we want to know where the daily is going. When we know where the daily is going, we know where intraday is going. We just need to find the retracement for the long opportunity tomorrow, right? So until next time, take care of yourselves, guys.